Guys, this is S&P 500 weekly technical analysis for the week of June 24th. Last week, S&P 500 managed to move up and gained around 1% in the entire week, whereas the major gains were seen in the Dow Jones, and the Dow Jones gained more than 1.5% in the last week. And now, because of these 1.5% heavy gains, the Dow Jones is at the junction where it is going to turn absolute bullish. However, because of this closing, the moving averages failed to give a bullish crossover. But in the next week, if there comes a small red candle or a small green candle, in that case, Dow Jones will be able to get a bullish crossover. And also we have seen that the S&P 500 was reluctant to sustain above 5,500, which was the psychological mark. But when the Dow Jones turns absolute bullish, then it will help the S&P 500 to sustain further. This means that S&P 500 is expected to sustain even if there comes a little fall, and is expected to sustain bullish. However, because of the formation of this last candle in the Dow Jones and also this last candle in the S&P 500, there are conditions which can force the entire market to come down a little. But as long as the S&P 500 is sustaining above the heavy support levels, it will sustain and it will remain bullish. So I will discuss all of this in detail in this S&P 500 weekly technical analysis. Now let me give you a quick recap of what we were anticipating and what has happened in the market. So last week, the primary point of discussion was the gap between the Dow Jones, S&P 500 and the Nasdaq. And I've explained in detail that this gap or this disconnect won't be there for too long. Rather, the market will try to correct itself. This means either the S&P 500 will come down, or the Dow Jones will move up, or this will happen simultaneously, so that the disconnect between the Dow Jones and the S&P 500 and the Nasdaq, it can be covered. So now what we have seen surprisingly is that the S&P 500, it was under pressure. It moved up by 1%, then in last 2 days it came down and the net movement was only 0.6%. Whereas surprisingly the Dow Jones was able to move up. It was able to move up, it was able to clear the Ichimoku, the moving averages, the strong resistance levels, and in total it has gained 1.5%. So this was the disconnect that I have discussed in detail in the previous S&P 500 weekly technical analysis. And if you think that now there is no more disconnect, then no, there is still a lot to cover. This means that again there is a possibility that the S&P 500 can be seen under pressure, or it can give a limited bullish movement, or it can come down, whereas the Dow Jones, it will try to move up. So I will discuss everything in detail in this S&P 500 weekly technical analysis. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So on the weekly chart, S&P 500 has gained a little, okay, and there is a candle which is indicating a little weakness, okay, although the S&P 500 is expected to remain bullish but with some weakness. Whereas in case of the Dow Jones, there is a good bullish candle, okay. So I will discuss this on the weekly chart, and weekly chart is the long-term picture, the big picture for a month, for a quarter or so. The second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, you can clearly see that the S&P 500, it was reluctant to move up or move beyond 5,500, which was the psychological mark, and then it came down, and still there are chances that it can further come down, okay. But this does not mean that it is going to leave the bullish trend now. It will remain in the bullish trend for now, okay, although there will be some fall, some weakness, that is fine, okay. But on the daily chart, we can see here that there is a special condition in the Dow Jones, okay. This special condition is expected to put pressure on the Dow Jones, then the same pressure will be felt on the S&P 500, okay, and the other indices. So I will discuss in detail this on the daily chart. Now the third point of the agenda is the probable movement of the S&P 500 from June 24th, which is Monday, to June 28th, that will be Friday. So just like last week I have discussed the bullish and the bearish conditions, the disconnect between the Dow Jones and the S&P 500, the percentage movement and the levels it can come down or the levels it can move up. So I will discuss the same here in the last point of the agenda. And now June 28th, the PCE data and the core PCE data will be published. So June 28th and June 27th. So these 2 days, okay, these 2 days we can expect the volatility to increase. So I will discuss that in the last point of the agenda. And guys, once again, I will recommend to watch all of these 3 sections, because when I say the probable movement, I would have already covered the 50% probable movement in the daily and the weekly chart, and rest of the 50% here in this the last point of the agenda. This is why in order to understand what exactly is going to happen in the S&P 500, Dow Jones and Nasdaq, it is recommended to watch all of these the 3 sections. So now guys, I am going to begin with the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. So guys, this is the weekly chart. W as in weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So before I discuss the weekly chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these, the daily and the precise updates of the S&P 500 from Monday through Friday every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's first discuss the candle. It's a bullish candle, okay. There is no defined shape of the candle, but it's just a normal bullish candle. It indicating the bullish sentiments in the market. But these bullish sentiments are not heavy, which can help the S&P 500 to continue the bullish movement. So I'm not saying that for the entire week it cannot move up. What I'm trying to say is that for 1 or 2 days it might show some weakness, and then it can recover, and then by the end of the week, okay, it can try to sustain and it can try to close bullish. However, the bullish sentiments will be there, and the bullish movement is expected to continue even if there comes any fall. But when we look into the last weekly candle of the Dow Jones, it's a good bullish candle in the Dow Jones. Okay, this good bullish candle and also the closing of the candle is above the moving averages. There was supposed to be a crossover in the moving averages, but now that crossover is not there. Okay, or rather there is a kind of slip. Okay, this slip can help the Dow Jones to move up further. Okay, this also means that even if there comes any fall, this fall is expected to be limited to 38,900 or so. Okay, and then the Dow Jones is expected to sustain and it is expected to move up. But this bullish movement in the Dow Jones does not confirm that the S&P 500 will not come down, because as I mentioned earlier, that there is a disconnect between S&P 500, Nasdaq and Dow Jones. So when we see that the Dow Jones is recovering, at the same time the S&P 500 and the Nasdaq, they can give up, so that this gap can be filled, right? Anyways, so now let's discuss the technical indicators. Now in terms of the technicals, nothing has changed. S&P 500 is absolute bullish. Okay, clear fan out and everything is there. And MACD and the stochastic RSI, okay, both are bullish. And whenever these are bullish, S&P, the stochastic RSI and the MACD, then this indicates the bullish sentiments and the bullish movement. The only problem is that on the weekly chart, S&P 500 is 100% absolute bullish. At the same time, it is saturated as well as overbought, and this is the problem in the S&P 500. That is why if we look into this, the Dow Jones, so Dow Jones is neither saturated nor overbought, and also the MACD and the stochastic RSI is these are still trading bearish. Okay, that is why there is a disconnect. So this means the Dow Jones can still try to move up, or it can still move up, but at the same time S&P 500 and the Nasdaq, they might show some weakness. Okay, so as of now S&P 500 on the weekly chart is 100% bullish, okay, or absolute bullish. And the same you can clearly see here in my first update to my Patreon community members I've given on 18th. And here I mentioned that S&P 500 is struggling to clear the 5,500, which is the psychological mark. This means that there are less chances that it can breach and move above 5,500, because it has to respect in some manner. And there was a heavy resistance, and even if the S&P 500 manages to clear the resistance and sustains above the resistance, then also it will not be able to hit 5500 exact mark because of the psychological this the pressure. So what we have seen on 18th is that S&P 500 moved up around 5489 or 88, and then it came down. And then only next day, when the open was approximately 5500, S&P 500 managed to breach and move above, but still it failed. So I will discuss the 5500 in detail, but as of now, S&P 500 is 100% absolute bullish, absolute saturated, and absolute overbought. Okay, whereas surprisingly the Dow Jones on the weekly chart is not. The Dow Jones on the weekly chart is still 50-50, I will say 50-50 only. Okay, now this 50-50 on the weekly chart is in the bull side. Remember, although it is 50-50, it is neutral, but still this neutral is in the bull side, means more into the bull side. This means that even if there comes a fall in the Dow Jones, then also Dow Jones will be able to handle and the Dow Jones will be able to sustain, unless there comes a heavy profit booking and the entire market goes down. So I will discuss this thing in detail on the daily chart. This was the weekly chart. But guys, before I discuss the daily chart, I have this information to share with you, that this is my stock market knowledge transfer program, or S&P 500 knowledge transfer program. And here I teach the movement, hacks, strategies, trend, analysis, technicals, predictions. Prediction means to predict the movement even before it happens in the stock market, support and resistance levels, and much more. And the motto of the program is to help you become self-reliant, and this program is delivered one-on-one basis. And also whatever you are going to learn here, the movement, the patterns, and everything, these are technicals, it will be applicable to any stock, index, currency, commodity, crypto, or anything. And this program is delivered one-on-one basis, and this is my email address, and this is the Google spreadsheet. More details are there in this, the Google spreadsheet. And this is the Google spreadsheet, and here you will notice that I will discuss everything from the basics to the advanced, the technicals, the modified technical indicators, the trend, and the options, basics and the advanced options, calculations, live calculations, the calculator, options calculator, and the support and resistance levels, and how to predict the movement, how to analyze the trend in advance, okay, and everything. And these are the important terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, or if you have any questions that you want to ask, then this is my email address. And also I have given the link to this program in the description of the video and also in the comment section. So please feel free to reach out if you have any questions or if you want to participate. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. So guys, before I discuss the daily chart, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these, the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now here, let's discuss the candle. If you look into this, the last candle, it's a bearish candle. It's not a special candle. The special candle is here in the Dow Jones. Okay. So in the S&P 500, it's simply a bearish candle. However, surprisingly, the S&P 500 managed to sustain above the heavy support level. And this happened for the entire week. That is why again and again in my daily updates to my Patreon community members, I mentioned that as long as it is sustaining above this, the strong support level, it may or may not move up, but it will sustain. This means that although this was a bearish candle, this was the bearish candle, the bearishness from these candles, see, these candles are indicating, two candles, these candles are indicating bearishness clearly. Okay, but the bearishness will not be felt or will not be will not be realized until and unless S&P 500 gives up what? The strong support level or the low of the candle, which was 5452. Okay, once it gives up the strong support level, okay, that is a primary condition, and then the low of the candle and then sustains below, that will be the case when we can anticipate that it will come down further and it will lose more. Lose more means 0.5%, 0.6% or so. Okay, not much, okay, not heavily, because the Dow Jones will try to help the entire market to hold or to sustain here, right? And when I analyze the candle of the Dow Jones, okay, then this is a bearish candle, okay, and it's a strong bearish candle. This bearish candle is indicating that on Monday, okay, chances of seeing a gap down open are not there, but yes, on Monday, irrespective of any open, we can anticipate some bearish movement. This bearish movement will turn into a heavy bearish movement if the S&P 500 loses the 5452 and remains below 5452. Okay, in that case Dow Jones will come down, but Dow Jones will not come down heavily. It will be the S&P 500 that will come down heavily. Dow Jones will still be able to sustain, because now there are the moving averages, Ichimoku cloud, a very heavy support for the Dow Jones. So this bearish movement, okay, it is expected to be limited, or if I calculate, then it is expected to be up to 0.8% or 0.75%. But yes, this bearish movement will create a problem. What problem? As of now, the moving averages are very near to give a bullish crossover. Okay, so if there comes this heavy fall, in that case these moving averages will not give a bullish crossover, rather there will be a slip, a bearish slip, and this bearish slip will then on either on Tuesday or on Wednesday will force the S&P 500 to come down, just like what we have seen here and here, right? So this was with the candles. Now let's discuss the technical indicators. Technically here everything is bullish. Okay, now let's see what is happening here in the MACD. MACD is bullish, whereas stochastic RSI is a little bearish. Although stochastic RSI is trading in the bull side, but it has changed the sign for now. This means that if there comes a heavy bullish candle or two normal bullish candles or three normal bullish candles, in that case the stochastic RSI, okay, it will change to bullish in that, and then MACD will be bullish, stochastic RSI is bullish, and then there will be more bullishness. So as of now this is bullish and everything is bullish, but now again the same condition. So here I will say that the S&P 500 is 90% bullish. It is not absolute bullish, it is only 90% bullish, but at the same time it is in the overbought condition, and also it is saturated. So on the weekly chart we have seen overbought saturation, on the daily chart we have seen overbought saturation, and on the weekly chart S&P 500 was absolute bullish, 100% bullish. Here the S&P 500 is 90% bullish. Okay, so overall the thing is that the S&P 500 will be considered as absolute bullish, overbought and saturated. So that is the reason why we can anticipate some fall, some bearish movement in the S&P 500. Okay, whereas when I analyze the chart of the Dow Jones, okay, so here you will notice that there is still some confusion here in the moving averages, okay, and now Ichimoku cloud, everything is clear, but this is the change. Now the MACD is bullish, stochastic RSI, it was already bullish, so now there will be bullishness in the Dow Jones. Okay, so this was a major change in the previous week. This means that now the Dow Jones will be considered as 70% or 75%, I will say. The Dow Jones is now 75% bullish and is not saturated, and is not and is neither saturated nor overbought. And there is one more important thing, and that is this day, that was Thursday. So on Thursday we have seen S&P 500 moved up. It hit the 5,500, breached 5,500, and then it made an all-time high of 5,505. Okay, so on this day the S&P 500 was heavily overbought, heavily saturated, okay, and absolute bullish on the daily and the weekly chart. And on Thursday, in my pre-market update to my Patreon community members, I mentioned here that today we are expecting a profit booking in the S&P 500 and the Nasdaq. The profit booking might not be seen in the Dow Jones because Dow Jones was not in a condition of profit booking, but S&P 500 and the Nasdaq, they were in the condition of the profit booking. So in my pre-market update, I have given the logical and the technical reasons that why we are anticipating the profit booking. So profit booking means there will be a gap up open, it will try to move up and then it will fail and it will come down. So intraday we have seen 1% or more than 1% fall. So the same condition may be seen in the next week too. But whatever is going to happen or whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 from Monday through Friday. If you are my Patreon community member, and if you have not yet joined my Patreon community, then you can join my Patreon community. So along with these, the daily updates, the daily precise updates of the S&P 500 and the Dow Jones from Monday through Friday, I also give the stock market opportunities in the premium stocks of the US stock market, top 20 or top 30 companies of the US stock market. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these two tiers: daily S&P 500 updates for non-US and Canada residents, the daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting the daily S&P 500 analysis updates, probable movement every day from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, more than a year or so. And they are getting these daily precise updates of the S&P 500 Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week from June 24th, which is Monday, to June 28th, that will be Friday. So guys, once again, here I will discuss the most of the probable movement. However, I have already discussed the probable movement on the weekly and the daily charts in those sections. So if you have not watched these two sections, then I will advise you to watch these two sections in order to understand what is expected to happen and why it is expected to happen in that manner, right? So next week, 27th of June, there will be the GDP data, and on 28th of June, there will be the PCE and the core PCE data. Although there might not come any specific movement because of this the GDP data, okay, but once this the PCE and the core PCE data will be published on 28th before the open of the stock market, then definitely the stock market will consider this data, okay, in terms of the inflation, and then it will give that kind of reaction. So I will keep you posted every day what is going to happen and how it is going to happen if you are my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So now the picture is clear that there are these two candles, okay, bearishness. This bearishness is expected to continue, and this bearishness is further confirmed by the Dow Jones, okay, because of this the technical bearish candle, right? Now everything will remain same. There won't be any big change unless there comes a heavy fall on Monday, okay. Now why there might come a heavy fall, all the chances are less, okay, but the heavy fall might come because the S&P 500 on the daily chart as well as on the weekly chart is overbought and saturated. So I've discussed this in detail in the daily and the weekly chart, okay. So that is the reason. In case of the S&P 500, for the heavy fall to happen, it has to breach the heavy support level, and after the heavy support level, it has to breach and sustain below 5452, which was the low of the last candle. Okay, so once it breaches and sustains below this, the last candle, then it will come into the condition where it will be coming down to get support at this the red moving average. Okay, so this means that once it comes down to around this the red moving average, then at the same time we need to see if the Dow Jones is sustaining here or not. And also the most important part here is that if there comes a heavy fall, then we need to see closely, because the these two moving averages are very close to each other. Okay, I think there is a difference of 4-5 points or maybe 7 points only. So we need to see that if this fall has forced the moving averages of the Dow Jones to give a slip, or to form a slip. Okay, so what is the slip? Slip means the fall. Okay, last time also there was a slip. The Dow Jones was trying to sustain, but because of the formation of the slip, it gave back to back red candles. Okay, but if there comes a slip this time, because now the Dow Jones is 75% bullish. Okay, so this is what I mentioned on the daily chart, that now the Dow Jones is 75% bullish. If there comes a slip, in that case this will force a Dow Jones to come out of the 75% and to remain bearish. And in this particular condition, a special condition, the S&P 500 fall now will be coming down, and there is a gap between these two levels. Okay, the high of the candle was 5375. So in this condition, the S&P 500 will be coming down to fill the gap and to hit 5375. Right, and yes, see, as of now, because we know that S&P 500 and Nasdaq, okay, these two are extremely bullish, and okay, 5500 in the S&P 500, whereas the Dow Jones is lagging behind. Okay, so last week we have noticed that there was a restricted movement in the S&P 500, whereas there was a heavy bullish movement in the Dow Jones, especially on Thursday. Heavy bullish movement in the Dow Jones, more than 1% or so, and in the S&P 500 there was the bearish movement. So again, the Dow Jones is trying to catch up with the S&P 500 and the Nasdaq, and this is why S&P 500 and Nasdaq, they are showing some weakness or bearishness, and the Dow Jones is trying to cover, okay, the distance. So that is why this is very important, that if the Dow Jones comes down, in that case the S&P 500 and the Nasdaq will be forced to come down. Okay, but if the Dow Jones sustains, then also chances are good that the S&P 500 will also then the S&P 500 will come down. Okay, because of this particular reason. Okay, this is the disconnect. So the good thing will be that when the S&P 500 comes down, fill the gap around, comes down to 5375, or even below to around 53550 approx, and at the same time if the Dow Jones sustains and moves up, goes bullish, then this the gap or the disconnect. Okay, then we will say that now, yes, now the indices have come to the same page. So what it means? This means that even if the Dow Jones remains bullish, then also there are conditions that the S&P 500 can come down. Now what about the bullish movement? Yes, definitely the S&P 500 is absolute bullish. Okay, and at the same time overbought and saturated. This means that if the S&P 500 moves up, okay, then at first again it will have to struggle at or around 5500. It might be able to breach 5500 a little. Okay, just like what it did on Thursday. And on Thursday there was a condition of the profit booking, and this is what I've informed to my Patreon community members even before the open of the stock market. So this means that there won't be any bullish movement, no bullish movement, until and unless there comes a closing above 5500. Once there comes a closing above 5500, then only there will be the conditions for more bullish movement. Okay, so now you might question that the S&P 500 has already breached. No, breach is one thing, but it is actually the closing. Closing will define whether the index is going to sustain or will go bullish or will go bearish. It is all about the closing. Okay, that is why a closing above 5,500 will help the S&P 500 to move up, and not the breach. A breach might happen, S&P 500 might move up to 5,551x or 552x. But if it comes down intraday, if it gives a closing below 5,500, then again we will expect more fall in the S&P 500. And once it fulfills this condition, it closes above 5,500, then there will be some more bullish movement, 1% or so. Okay, but remember, now the S&P 500 is trading in the overbought and the saturation. Okay, and this means that any more bullish movement will simply add more overbought, will simply make it more overbought and more saturated. Okay, so this means that if the S&P 500 comes down, in that case it will be able to cool down itself, and it will also come out of the overbought and the saturation, and then it sustains, and then it is free to move up. So that will be perfectly fine and technically acceptable. So that is there in the bull side. In the bearish side, okay, in the bearish side, what we know is that there is a gap, and that gap is at 5375. Okay, 5375 is the mark. Okay, so S&P 500, if it comes down, if it shows more bearishness, then it will come down to moving average. When it comes down to the moving average, then it will be quite near to 5375. Okay, in that case it can come down to fill the gap to 5375, and when it comes down to these the levels, then it will be out of overbought and the saturation, and then all it has to do is to sustain, and then it will be free to move up. As simple as that. But whatever will happen, whatever is going to happen, I will keep you posted through these, the daily and the precise updates of the S&P 500 from Monday through Friday if you are my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your question through the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, this was my S&P 500 weekly technical analysis for the week of June 24th. Means from June 24th, which is Monday, to June 28th, that will be Friday.